started with the focus on India 3. And what is India 1, India 2, India 3? India 1 is about 86 million families whose annual household income is about $7,400 and above. India 2 is between $7,400 and $3,300. That's about 100 million families. And then India 3 is about 80 million families which are below $3,300 annual household income. So originally the focus of Aadhaar and India Stack was to actually solve for this benefits transfer problem, and this is a very big problem because roughly about 4,000 rupees per India 3 family per month is what leaves the central and the state treasury as benefits directed at the family, and roughly in some states maybe 20% reaches, in other states less than 20% reaches, right? So think of it, 4,000 leaves the central and state treasury, 800 rupees reaches the family, and then when it comes time for elections, the politician comes around and says that, look, I will improve your benefits by 50%. I'll make that 800 become, let's say, 1,200 rupees. Mutters usually to himself that I will improve 4,000 to 6,000, my share will also go up by 50%. Everybody is happy, and this has been the political narrative of India for 65 years. Today what you're seeing happen is something dramatically different. Today there are two classes of politicians. One class of politician is the original politician that I just described. The second class of politician says, I will let 4,000 rupees remain 4,000 rupees, but I will actually deliver more of that to you. And the remarkable part of India today is that the second type of politician is beginning again and again now. And so therefore you are going to see in the years to come a slow but steady and a rise in the human development indicators, simply because more of that money is starting to reach the people. And in fact, if all 4,000 rupees reached a family in Odisha, they could actually have very good human development indicators there, because you can actually live reasonably well in that amount of money, right? So this is a revolution that is happening, and it's became clear to us in Ispirit that this was on its way. It had political capital and a political momentum back in 2013. So believe it or not, it was here in Bombay, one of the Ispirit volunteers asked a question, said, okay, we found the silver bullet through technology to change the trajectory of India 3. What can we do to change the trajectory of India 2, the 100 million families that are there? And that led to intense debate inside Ispirit. Should that be health inclusion? Should that be education? Should that be what, right? And of course, what came out of that in late 2013 is that it should be financial inclusion. And that set in motion a journey which we are beginning to see the results of today. And to get that financial inclusion to happen, we needed a mass market payment system. And that mass market payment system was conceived in late 2013, was introduced to NPCI and subsequently RBI in 2014, was launched by Governor Raghuram Rajan announced in early 2015, and then 2016 saw multiple launches, right? The tech launch took place in February last year, the bank launch took place in April last year, and the consumer launch took place in August of last year. And at that time, some of you who have been tracking this know that Ispirit made a prediction that we will have 100 million people using UPI by end of this year. And I remember almost without exception, everybody laughed at us. They said it is not possible. And I have now had this wager with many people. People don't do this wager anymore, because now it is a given that we will have 100 million people by end of this year. It is quite possible that we may cross 150. So why is this important? Because it gives you a mass market payment system, and that creates the digital trails that are important for flow-based lending to happen, right? And so that in some respects is opening up the market, apart from what is going to happen later this year with GST. So this is really an example of a new type of policy making that is happening today in the government. And it is a type of policy making where there is a technology spine, there is there are market participants, and then also there is policy. So all these three things come together to make a difference. So way back in early 2014, it became obvious that if we wanted to do a 2.0 on financial inclusion, the only way that will work is to actually have all the three things come together, right? And so that is really what has happened. And so the technology, of course, is India Stack. The policy, there are a bunch of things that are already in place, and now we are beyond launch of the basic policies. Now government is tracking a target, as you know, of 25 billion digital transactions for this financial year. Just so that you know, the number last year was 9 billion digital transactions. So the aim is to go from 9 billion digital transactions for the last financial year to 25 billion digital transactions this year. And that, for obvious reasons, is important. It is also, of course, to do with a bunch of other stuff that is important. Most of it is to do with wholesale capital. Demonetization created large pools of wholesale capital in the banks. And there are serious discussions taking place to redirect mudra to be only wholesale capital to be used for the channel that we are talking about. So 50,000 crores this year and may be refreshed in the subsequent years. And of course, there's some work that remains to be done. User education is very important. There is a role for the government to get involved there. And there are some delinquency related stuff that needs to be done. For example, if you really want to do short-term loans, you can't have a 3-month reporting period for delinquencies, right? You can't give a 7-day loan and a 3-month delinquency reporting, because that will result in over-indebtedness, and and that will bring the industry down. So there is an effort underway to get that 3-month delinquency reporting down to 3 days or less. And it would be, of course, based on the tenure of the loan. So there is some work that remains to be done on the policy side, and that will hopefully come together. And of course, the market participants who will make this happen are many of you who are digital lenders. There are NBFCs and the bank. So all of the three acting in concert are likely to bring this industry to life. What does bringing this industry to life mean? What are the numbers are we talking about? The numbers that we are talking about from an Ispirit perspective is we want to, in a year's time, get to 80,000 to 100,000 crores flowing into India to every year. And we think this is achievable. And so that is really the number that we are, some people call us jihadis. So we are really pushing hard for that jihad, and which is to get to 80 to 100,000 crores flowing on a per year basis into India. Now there is an analog for this. This has happened. We just don't see it this way. India has very often embraced large scale change in a very small amount of time. And I would take you back to 65. 65 is when we launched television. And then by 75 we had reached 7 cities, and then the government woke up and said this is too slow in expansion of reach of television, so they really turned up the knob. And by 1985 we had 30 cities. This, and this was supposed to be a big achievement because Asia at 82 happened and all of that. But frankly it was very small progress, right? So if you then take a period from 88 to 95, right, about 7 years, there was more expansion of television, 20 times more expansion of television that happened in those 7 years than what had cumulatively happened in the previous 23 years. So can you imagine why? Why 23 years if X was the expansion of television? Why would 20X happen in just 7 years, right? The reason, if you remember, was satellite television. So the satellites became possible. They were the infrastructure. By then, liberalization of content had happened. So Hum Log, Ramayan, and Mahabharat, and content like this was available, which was the result of policy changes, which eventually led to Prasar Bharati. And then finally, village level entrepreneurs were driving this, because much to the surprise of everybody in the West, everybody in the village figured out mostly on their own on how to establish a village cable television network. And within 7 years, everybody had television, right? So you see, that was a type 3 kind of situation that we are talking about. And our expectation as Ispirit, as a think tank that is championing this in a very big way, is that we would like to see the same thing happen in the next 5-7 years, right? And you guys you have the front seat, you are there at day zero, so it's a wonderful opportunity for you to be there. So, so how does it work? It works, I'm not going to go through this, but it works because literally over a weekend you can build a loan management system because all the key elements are there. And we are kind of joking and saying, if the act of issuing a loan costs you more than 4 rupees a loan, you are not doing your business right. And I know the person who is doing 4 rupees a loan are not in this room. So otherwise I would have pointed them out and requested them to stand. And so this is the thing, because the ability to be able to do it at 4 rupees is definitely there. That is the price point. So whatever money that you're spending on top of this, if it's costing you 40 rupees to administer the loan, then that 36 rupees are better spent buying data so that you can actually be in a competitive environment and make a better loan offer, right? So the first step you have to do is leverage what the public goods that are there so that you can actually save money and to be able to do that. And if you need any convincing, please go and talk to, how many of you have a Jio SIM? Yeah, you know what I'm talking about. You know, a year or two from now, do you think any mobile operator will offer paper KYC? They would be out of their mind to do that. Why would they offer paper KYC when electronic KYC can be done at 1/10 the price in 186 seconds in a much more secure fashion? So don't be the dinosaur who is doing the paper KYC version of loans. If you are the young guys and you cannot embrace the new system, I think you got to go back and introspect on this, right? So this is really the table stakes from that perspective. I want to talk a little bit about business issues very quickly. Of course, the two big segments that will open up are, one is to do with GST. As you know, GST will bring high quality business data about a small business, onto the surface, where the provenance of that data is well established because it's coming from the GST system. There are 7 million businesses that will see that happen, and therefore, right from bill discounting to other kinds of lending will become possible for this segment. And so this is a very, very large opportunity by itself, right? The second big opportunity is to go after the micro entrepreneurs who are going to be doing it who will be collecting digital payments, and these are auto rickshaw drivers, small shopkeepers, and the like, who are basically going to go digital as part of this payment revolution that we are seeing right now. The key point that we want to leave with you is that if you are thinking of offering an old loan product, you haven't embraced the revolution. The old model was, I have 30 loan products, Sharad Sharma walks in, you quickly test my eligibility against those 30 products, see that I'm eligible for 2 of them, and then you choose to either offer both or one of the two. That is not going to be the new world. The new world is that you will have to assemble an offer for me at that point in time. And in that respect, this is going to be more like auto insurance than it has been like traditional lending. You can go to 4 auto insurers, all 4 will assemble a product for you at that point in time. And very often they may actually be working off the same data set. And therefore the offers may not be same because their models are not the same and their objectives, the business objectives in the market are not the same. The second point is that you have to start with short tenures. And in fact, our recommendation is that you must start with a 1-day tenure. But to force you to do a 7-day tenure, we are going to actually do the Chandigarh pilot, which is going to get launched in a few weeks, where the only tenure you will be allowed to offer is a 7-day tenure. If you don't have less than a year tenure or less than a quarter tenure, you're out of the game even now. So the biggest thing I want to leave behind with you is that tenure is the knob that you need to control to figure out whether or not you can actually lend to that individual. And you have to build the credit history from a short tenure progressively to long tenure. That is how the people will come into the system. And none of the lending products the traditional lending products actually have a provision for this. So if you are not building a new loan offer system internally to be ready for this new world that we are talking about, you are going to miss the boat despite being there right in the beginning, right? So this is going to be an important element. And of course, there are many other parts of this. You need portfolio risk assessment that has to go with this, because your portfolio will have loans of multiple tenures, right? And so therefore your current assessment tools will also not work. But you have to reimagine your systems to operate in this world. That's the message that I want to leave behind with you. The second goal that we have as Ispirit is we want to make sure that every borrower has options. So credit marketplaces will become more important, and our goal is, and because in a digital world, for that person to offer his or her data to 4 players is no more expensive than offering that data and an application to 1 player. So you will have to operate in a competitive environment where everybody, every borrower, maybe not for the next 6-8 months or a year, but eventually will have choices. So again, I go back and remind you, this is more like the auto insurance business than it is like the traditional lending business. There won't be proprietary access to the customer if we have our way, right? So, so therefore you will have to compete. And therefore, if you want to compete at the time of renewal, for a 7-day loan or a 30-day loan or a 6-month or a 1-year loan, it is important that because that person is your customer, you have privileged access to that person's ongoing data during the tenure of the loan. And therefore, when it comes for renewal, you are better placed, better organized to figure out whether you want or whether or not you want to rotate that loan or not.